The Morning Drive is sponsored by Power Metallic. To find out more about the company, please visit their website at powermetallic.com. Follow the Money Investor Group is a 100% Indigenous-owned company and certified with the Canadian Council for Aboriginal Business.
Nicholas Campbell, CEO of Mayfair Gold, got you for a morning drive here in New Orleans.
Yeah. It's beautiful today.
Yeah. So we were just talking off camera, but you were watching the Jays game?
I was watching the Jays game, yeah. I managed to catch the last couple of innings after we landed. Actually on the flight too. Everybody was watching it on the flight.
Yeah.
It was a good game. It's a tough loss, but it was a good game.
Yeah. Character builder for the core. That's all I'll say about that. So I don't know really, we don't know each other.
Yeah.
And the audience wouldn't know you. So where'd you grow up?
I grew up in Vancouver, and I'm unusual that I stayed in Vancouver. I have a unique background in that my dad was a politician. So my dad was the mayor of Vancouver. He was the premier of British Columbia.
Wow.
So it made for a bit of a different upbringing, but lots of great opportunities and great experiences too.
I mean, I got to ask you what it was like to grow up, in a political family. Like,
I don't know. It's just the way I grew up, So
it's just normal to you.
For me, it was just normal. I wouldn't say it was any different other than my dad was away a lot because he was working a lot. So, yeah.
Okay. So then, you got kids?
I do. I've got 4 kids. I've got 4 kids and 3 dogs and 2 cats.
All right. So you have lots of
too many dependents.
Yeah, you've got lots of things to take you away from business when you need to be taken away. So you got to decompress sometimes.
I do, yeah.
Do you ski?
I don't ski. I love skiing. I just don't find that I have time to do it. So,
okay.
If I have time off, I end up going away with my wife. Which is what I'm doing after this conference too. Staying in New Orleans to have a couple of days just with her.
Okay.
Yeah.
Well, I guess we'll get into your professional career. So, you're in a political family, and then where did you go to school?
I went to school at the University of Victoria, and it was not. I always liked economics, and I got a business degree, but I really always sort of kept up with economics, and that's really been more the driver for me professionally. So I got my degree, and then I was kind of rudderless, to be honest, and then I got an opportunity to intern at a boutique brokerage called Salmon Partners. And after working there for a few months, the head of research who I was working for decided that he wanted to offer me a job to be his research associate. That was Haitham Hoadley. Haitham is now the president of Wheaton.
Oh, yeah.
I worked with Haitham. He's a great guy. Learned a lot from him. Worked with Haitham for a few years until 2007. Then I went to work at Canaccord. I was an analyst at Canaccord for 6 years. And then I left the brokerage industry. I was kind of tired of it, to be frank. And I wanted to do something where I thought I could actually get something done and actually do something real. And so I went on to build something, be a part of building something that actually happened in the real world, not just talking to people about what other people were doing.
Yeah.
And so I went and started working with Eric Fear. And so with Eric, I worked with him for Gold Source Mines. I was the CFO of Gold Source Mines. I was also at the same time, I was executive vice president of Silvercrest Metals. So when I started there right from the get-go. So Silvercrest Metals was spun out from Silvercrest Mines, was sold to First Majestic. So I started there basically at a $15 million market cap. I left Silvercrest Metals in June 2020. It was about a $1.5 billion market cap. And then I took about a month off and I tried to get a job working with Stephen Dean at Artemis. I got a job working with them. I joined the company in August of 2020. And starting building a $1 billion company is a lot of work. It's a big grind. I probably should have taken some more time off. I ended up leaving Artemis in March of 2023. But I got a lot of people into that story at a low price. And basically everything that I thought would happen with that company has come to pass, except the gold price is a lot higher. So I thought it was going to be a $15 to $20 stock by 2025, and it's about a $34 stock today. So, and that's because of the execution of what they did, and also because gold prices are a lot higher than what we thought.
Well, the easiest way to raise money is to make people money, and then
Sure.
raise money,
Yeah.
move money around. So I'm assuming that's something that's been there for you.
Yeah, it has, and I mean the there's a nice thing about Mayfair, and then there's the bad thing about Mayfair. So the nice thing about Mayfair is that we have really dedicated large shareholders. So Muddy Waters, Heaney Capital. We now have some new pretty significant shareholders in Oaktree and Nokomis. These are people that are there to fund our project through to production. And so that means it's always nice when you have 40% of any book is pretty much spoken for.
Yeah.
It makes it a lot easier to raise your capital. I also put my own money to work. I've always believed in that. I believe in having skin in the game. So I put about $2 million into Mayfair in the last year. I also put I think that includes $500,000 that I put into the financing that we did in September. So we're sitting on $42 million now in the bank, which is enough money for us to do whatever we need to do until early 2028. So it's nice to have running room for the next 2.5 years.
So what percentage of the float do you own with $2 million?
I own a 1%. I own 1% of the company,
Okay.
which is and that I own 1% including my options. Let's say that. So the largest shareholders are Muddy Waters. They own 17%. Heaney Capital owns another 12%. So those guys are the biggest shareholders. Oaktree, they bought into the last financing. They own 7%. Nokomis owns around 3%. So we're just starting to get more broad institutional ownership. It's fairly tightly held. There's some high net worth individuals that own another 20% odd. So there's about 60-70% that's pretty tightly held. Yeah.
Okay, that's good to know. If we were looking at a pie chart, your distribution
That's
of shareholders.
right. That's right.
And how many shares are outstanding?
133.
Fully diluted?
Fully diluted is 135, so very tight.
Any overhang? Any warrants?
No, there's no warrants. Well, okay, that's not true. We did issue some broker warrants. There's 1.3 million broker warrants that were part of that $1.65 financing. They're priced at $1.65 for 2 years.
Okay. And where's the stock right now?
The stock's trading anywhere between 205 and 210. We did the last deal at $1.65, and if you look at it, just to take the bull by the horns, it's been one of the worst performing gold equities over the last year. A lot of that has to do with the fact that we had an option proxy battle. So Muddy Waters started an option proxy battle last year, and every time you do that, it's messy. And so I knew I was coming into a messy situation when I took on the role, and we've had to deal with a lot of shares hitting the market. Unfortunately, when gold first started to rally earlier this year, when it had the big push up, that happened to coincide.
Sold into it?
People were selling. I was buying it. You can look at the insider purchases. I was buying it. Muddy Waters was buying it, but there were people that were filling those orders, and that was mostly previous management and the previous board.
Can you explain that option proxy? To be honest with you, I haven't even heard of that. So
Sure. It's so basically there were some concerns about how the previous management team was running the company and how they were also they were issuing their own options. They issued almost all of the options except for 300,000 options that were available under the rolling plan, and the options were really generous. They were 10-year options and they vested immediately. Really great options to own, but not great for corporate governance.
Yeah, okay, so that makes sense now that the larger shareholders came in and said, well, okay, what's going on with your options here?
Yeah, they were paying themselves too much. And
so they got voted out?
So 90% of the shareholders voted to remove them. And there was some other malfeasance going on with the story. But
so now hold on, if I'm living that moment, if I'm a shareholder, okay, these guys are gone now, but they have shares and everything, so yeah, they're going to sell out.
There were about 6 million options that were very in the money, like trading at the exercise price was less than $1, and we were trading around $2. So
they're up 100.
All of those got exercised. All of those hit the market.
How low did it go?
It got down to $1.55.
You know what? That's not that bad. When you consider.
It's not that bad. It's only bad when you consider that others, like if you look at the relative performance of the rest of the gold sector, everything's up.
On a relative basis.
Yeah.
Yeah.
So
but the timing, like the timing kind of worked out for you. Can you imagine if the gold price wasn't running?
Oh, for sure.
And these guys just wanted to get out?
This is the good thing. So, whenever that happens, people start to ask questions, what's wrong? What's wrong with this company? There must be something wrong that I don't know. So one of the questions people had was on metallurgy. We published feasibility study level metallurgical test work. We've established that there's a process flow sheet that works for this asset. It's the same process flow sheet that they have at Young-Davidson. Gets you 90% recoveries at 1.5 grams, around 83% recoveries at 0.8. So in the current gold price environment, that gives you very robust economics. And so we delivered that, we showed that, but you still have to kind of turn it around. It started to turn around a little bit in September. We started to get a little bit of traction, and there was an overhang. We had to raise some capital, so we raised the capital, and now we're free and clear. Like, it's a fairly clean story. We're about to put out a pre-feasibility study. One of the challenges of telling this story is that I don't have an economic assessment or a pre-feasibility study that shows the economics of what we're trying to do here. So I can talk till I'm blue in the mouth, but unless I have the data to support that, people just aren't going to buy into it.
You just got a bunch of forward-looking statements.
Yeah, that's right. A bunch of forward-looking statements. So
which
that
you should
PFS
all
is
be
going to come
warned
out.
about.
Yeah, exactly. You should always worry. You should always be careful and be skeptical about what somebody says, including somebody like myself, because there's a lot of very promotional people out there, and that's why I need to put out my pre-feasibility study, which is going to come out before the end of this year.
Now, lucky for you, you put up $2 million. So I
Yeah.
mean, forward-looking statements, you're biased.
I'm very biased.
But
yeah.
you put some money in.
I'm very biased. Yeah, I think. But I've done this a few times before, and one of my real investment philosophies is I always look 5 years out. How can the company change? How will the market view the company? I also do my own macro view in terms of what I think is going to happen. Mm-hmm. But one of the best way to create value.
You just walked yourself in, and we're going to have to cover the macro.
we can do the macro.
Okay.
But one of the best ways to create value is through execution. And Artemis was purely an execution story. They had a development stage asset that they put into production, and they created an $8 billion company from a $400 million company over the course of 5 years. So we have a different asset. It's not Blackwater. Every asset's different. It's a smaller version of that, but we do think we can put this into production. I see substantial upside potential as we turn our development stage asset into a new producer, and you see that revaluation happen before you actually get into production. So I know that we're gonna get that revaluation. We just have to do our job well, and we can be patient, and we have to tell the market what we're doing, and that's part of what we're doing right now.
Mm-hmm. Okay, I want to save sort of a lot of the deep dive into your projects for our X Space.
Sure. Yeah.
And hopefully, the audience, if you're listening up to this point, please go into the description. We'll put the X Space in here for you guys to put into your calendars. But give me like a 3-minute short of like the value proposition.
Sure. So we've got a 4.3 million ounce asset called Fenn-Gib. It's indicated. It's very well drilled. It's in the Timmins area. Timmins has historically produced 100 million ounces of gold. It's a great place to build a mine. And so what we did is we've identified a way for us to get this asset into production by building a small scale mine. So that can be permitted under a provincial permitting process. I always look at permitting. It's one of the things that I tend to spend a lot of time on. That doesn't sound sexy, but I want to put things into production, and you need permits to put things into production. And if you want to build a big mine, it's basically a 10-year permitting process to get all your permits in place, and at the end of that, you got to raise $1 billion to put it into production. So instead of doing that, I can be fully permitted in the next couple of years. I can get it into production for around $400 million. I can probably fund around $250 million of that in debt. There's not much incremental equity that I need to raise in order to put it into production, and I can generate production of something around 75,000 ounces of gold per year. That should generate over $200 million in free cash flow. I run that for 5 or 6 years. I generate over $1 billion in free cash flow. I get a revaluation, and then I have some flexibility. I can grow the asset, or I can go and I can acquire other production and turn this into a bigger company.
I mean, that's pretty great.
Yeah,
it's a great plan.
Yeah, I think so.
Yeah, so you need higher grades and smaller deposit.
Yeah, and you need and you need the right people in order to execute that. And I brought on Drew Anwell, and Drew's a key man. Drew built Detour Lake. He built the largest open pit gold mine in Canada. He's a serial mine builder. He's got a team that supports him, that has worked with him for the last 10 years. There's no single person that builds a mine. It's a whole team of people. So we are one of the few guys that actually has the team to execute this, execute the build, go through the permitting process, and operate the asset.
I think it's a very intriguing business model for sure. How when you're hitting the pavement, what's the feedback that you get?
Well, some people get fixated, oh, it's too small, but that's backward looking. I mean, if we were at $2,000 an ounce, yeah, it wouldn't be as sexy. But at 4,000 or 3,500 or 3,200, this is a really strong way to bring an asset into production. It's way lower risk. Some people get fixated on the grade. They don't recognize that there's a high grade starter zone that you can focus on. It's something that I identified early on when I started working at Mayfair, and it's part of what we're trying to show people when we get in front of people today.
Okay. Nick, why don't we do this? I'm going to spin this around. We'll head back to the conference.
Sure.
But why don't we finish with your personal view, the macro view of gold?
Sure. So, I mean, my view on gold changed when Russia went into the Ukraine, and this isn't going to get political or anything like that. But what happened was...
Not that, I mean, you don't know anything about politics or anything.
That's not the point.
Yeah.
I try to focus on economics rather than the politics, but they obviously are interrelated. But when that happened, the U.S. dollar assets that were part of the Russian central bank were frozen. And that basically weaponized the U.S. dollar for central banks. And if you look at it, central banks started heavily buying gold after that. And in June this year, gold
Let me pause you there, because
Yeah.
I know where you're going with this, but I just want the audience to understand. Why was it weaponized? What was the fundamental catalyst of what you're saying?
They froze all their U.S. dollar accounts so that they couldn't use it to help support their currency or whatever they're going to use for their central banks.
So what does that tell the rest of the world?
It tells the rest of the world that if they do something bad, the U.S. government can freeze their assets, and so you don't want to have that much exposure to U.S. assets. You're still going to have exposure, but you don't want as much because it gives you more flexibility if something bad goes wrong and you need to defend yourself.
And central banks said,
we're going to sell U.S. dollars and we're going to buy gold. And in June last year, U.S. dollars are still predominantly, they are vastly the biggest reserve currency out there. But in June this year, gold became the second largest central bank holding after the U.S. dollar. So that's the market for the U.S. dollar is so huge that even a small amount of that capital flowing into the gold space has a huge impact on price.
Yeah, on gold.
On gold,
yeah. And not so much the U.S. dollar. Because
no, not the
look
U.S.
at the
dollar.
U.S. dollars, even while this is happening, the U.S. dollar has remained strong. There's always people
Very
buying
strong.
it and their bonds.
Yep.
So, that's quite fascinating. So I think what you just did, because one of the things I've been asking myself, brother, I interviewed Peter Schiff, and it's like, who's buying gold and why?
Yeah.
And I think you've nailed that, honestly.
There's another push that's going to happen now, which is there's all these accounts that have never bought gold because it was just a place that it didn't make sense. The valuations didn't make sense. And for 15 years, it made sense for them to be away from it. And now a lot of those accounts are being told they have to get exposure to gold.
Okay, stop, please, for 1 second.
Yeah.
When you talk like that, when you say all these accounts, whose accounts are we talking about?
We're talking about hedge funds, like massive funds, like guys who, generalist funds.
So top-down mandate of people that manage money.
Yes.
You got to start buying gold. That's what you're saying.
You got to start getting exposure to gold, and they are just starting to. So there's so much more capital that can come into the gold space because that's a new source of capital, because that's different than what we're talking about with central banks buying. That is a flood of capital, of private money that's managed, that needs to start getting exposure to gold. And when that starts to filter through into the equities, there's a massive revaluation opportunity that's going to happen.
Peter Schiff has over 1 million followers. You just broke it down better than Peter Schiff. And I like Peter Schiff. But honestly, you just did a better job. Peter who?
There you go.
That was great, man.
Yeah.
So then, well, okay, I mean, you don't have to share this, but again, it's your personal opinion, right?
Sure.
So do you have any models or forecasts of where you think it can go?
No, I don't have a model. I think it's going to go higher, and then, you know, it'll come back. Like, you'll have periods of time. Like right now, there's a consolidation. I think gold
Healthy.
can go to, you know, it can go to 10,000. Do I think it's going to go to 10,000? No, I don't know if it's going to go there. But I think it'll get to 6 or 8. I think that'll happen in the next 3 years.
Well, I'm pretty sure if I remember correctly, I do a lot of interviews when I go to conferences, but about 3 hours ago, I think Rick Rule said that he sees like a 3x in the gold, 2 to 3x in the gold price in 10 years.
Perfect.
Kind of supports the thesis, right?
That sounds great.
Yeah.
That sounds great. But that's the macro thesis. That's why I wanted exposure. That's why I wanted an asset that had scale.
With the leverage.
And that's why I bought into Mayfair Gold.
Okay. Well, listen, I mean, I'm going to drop you off. This has been a fantastic morning drive, by the way. Very insightful. I do encourage everyone to go into the description and grab the XSpace date, put it in your calendars, and we'll deep dive more into the projects.
Sounds good.
Thank you very much.
Cheers.